Welcome to Wealth Coffee Chats, folks, for your daily live updates. Get the most out of today's episode by participating in the chat. Make sure you ask some questions, be part of the conversation, have a bit of fun, grab a coffee or a tea, take some notes, and get ready to start your day, folks. Quick few housekeeping rules, though. No spamming, no advertising or self-promotion in the chat. That's not on. Be kind and respectful to everyone when participating. And most of all, have a good time. Real estate investing can be your biggest asset. It also can be your most expensive asset when it comes to getting it right or getting it wrong, folks. It can be time-consuming, stressful, and that's why here at Positive, we have what's called a 6-star team, a full-service team that provides integrated wealth and property investing solutions and services simply designed to help you progress towards your goal of passive income through your property portfolio, folks. Make sure you check out our other podcasts on the Positive Mentor Network. Not only is there Wealth Coffee Chats, there's the Urban Property Investor. Drops every Wednesday with straight talking investing strategies and lessons with Sam Saggers. Property Investor Tales. This is where our clients, you guys, share real life stories from property investing, hosted by some of our advisors and strategists. And that's done every fortnight, dropping every Monday. Wealth, Wine and Wisdom, folks, that debriefs the week that was in the world of finance and property, hosted by yours truly, Jason Witten and Andy Fenton on Fridays. Welcome to another Wealth Coffee Chats. Marvellous Monday. Hope you're well, folks, wherever you are. If you think it's Get Rich Quick, you're in the wrong place. This is the wrong podcast. This is the wrong life for you. Welcome to another Wealth Coffee Chat. Hope you're all awesome and well. Hello. Good morning, everyone. Good to see you. Welcome to Wealth Coffee Chats. As the intro says, Jason Witten here. Do the quick intros. Many of you already know this, but Jason Witten's my name. Good morning. Good to see you. Thanks for coming along this morning for a Wealth Coffee Chat, a check-in, a daily check-in we do here to talk about your wealth when it comes to real estate investing. Today, I thought we might talk about is capital growth over? Maybe not. Depends. Depends on who you ask. Depends on what you're up to. We might chat about that a little bit later on. But before we do, say some hellos to a few of the regulars. Brad, good morning, mate. Good to see you. Thanks for joining this morning. Sanjeev, good morning. Tando, great to have you here. If you're new on the stream, the live stream, folks, give us a shout out. Say hello. We've been doing these Wealth Coffee Chats for a little while now, since COVID changed how the world operates, I think forever. And, in the mornings, about 10 past 8, just checking in. Maybe see if we can stay on track for this thing called property investing. It's a little bit of a marathon, not a sprint, folks, that's for sure. And it takes time to build our wealth. Most people don't get wealthy in property because they don't own their properties for long enough. That is the number one mistake myself and our coaching team see. Very sadly, most people think it is going to happen a little bit faster than it does. And to be honest, there's a lot of misinformation out there in the market. And misunderstanding about how and what and when to do things. So that's what we try and do here in the mornings, about 10 past 8 each day. Connect, have a chat, talk about things that are going on, and make sure we're all going the distance when it comes to our property investing. But great to have you on this morning, folks. Thanks for joining. And give us a shout out in the chat if you're new. It'd be great to hear from you and where you're up to. Hey, this morning we thought, is capital growth over? What are your thoughts, folks? Put it in the chat. It's always nice to get a little bit of involvement when it comes to the morning Wealth Coffee Chats. Capital growth. What drives capital growth? There's many things, but at the end of the day, Sam and myself, we've been helping property investors over 25 years now. At Positive here in our coaching and mentoring program. We're in our third decade, our 22nd year of business operations, coaching property investors in Australia and New Zealand. And there's a few things that drive things forward when it comes to the world of property investing. Now, some really pretty simple things. Sam creates what we call a forex growth matrix in his world. He's a bit of a genius when it comes to this idea of understanding what drives real estate. And you can dive deeper into this with Sam at other stages. But there's 4 pieces that he talks about when it comes to the types of growth, the type of deal that you do, right? Deal growth. There's always going to be growth in a marketplace depending on the deal. You might buy a property at a discount. You might buy something and add value to it. You might buy it off the plan, and there's time, and the time adds value to it. How you do deals when it comes to the world of property investing usually is available in any market cycle, whether it's an up, down, or a sideways. And usually that sort of that value, that growth created by being smart with the type of deal you do, the property deal, on average 10 to 20%. It's not a massive thing in that sort of sense when it comes to this sort of stuff. What type of other things that drive value or drive wealth in your property deal? The location, right? Location growth. Okay, location growth. Where did you buy it? Did you buy it in a regional center? Did you buy it in a capital city? Did you buy it, in a disconnected suburb? Did you buy it in an infrastructure suburb? Location. You've heard the drill. And this one's a lot longer. So this one, the deal growth can be delivered sort of 12 to 36 months. That's where you can get growth delivered in a time frame. Now, location growth, location's the big kahuna. It's like, yeah, come on. It can deliver significant property growth, value growth in your wealth if you get that right. So, to be honest, we give that a good 50 to 60% of your wealth will be generated from your location growth. Okay, when it comes to this stuff, and Sam dives into this and he pulls it apart like bit by bit. But here's a sort of big of an overview. And this this location growth, folks. We always talk about this is months over here. Now this is years. We're talking 7 to 15 years for location growth to really kick in and just smash our wealth, through the ceiling for all of us as we go along, right? So this is an understanding for how we go about it. Now, the other part over here, there's the economic growth, econom. Anyway, I'm trying to sort of shorten economy. Anyway, I think that's how you spell it. I think there's less C's in there, isn't there? Anyway, someone might be able to help me out with a little bit of my dyslexia when it comes to spelling sideways. But the economy. Now, the thing is with the economy world, it's quite volatile. It can add value, but it can also, take away value. And to be honest, the economy is kind of like a baseline underlying thing in here. Now, economic growth when it comes to jobs, population, GDP, interest rates, all those sorts of things, over time, it's quite a consistent thing, but the economy can minus as well as add, right? But anyway, you get the picture, and give it a good quality economy that's stable can add, 10 or 20% of your growth as you go. Now, these economies, they go up and down. Now, it's a cycle, a 3 to 7 year cycle when it comes to this wealth. And I'm not going to get sidetracked today about the economic wealth when it comes to this stuff as we go. But demographic.
demographic, right? So this is kind of the desirability of a property and a location and a place to live into the future. Yeah, totally. Type of property, Nintendo, can drive growth. You're dead right. What can you do with that property? Can you furnish? Can you develop in the future? Is it well designed, or is it a renovator's disaster, not a renovator's delight, as you go? And dead right, Luke, the economy at the moment is firing. We had Dr. Andrew Wilson, one of Australia's best property economists, on the other night in our coaching and mentoring program. And he's saying, listen, the Australian economy is looking good. Away we go. So demographics, population, the age of a city, and those sorts of things. And this absolutely can drive some growth over time as well. The demographics, suburbs changing, so location becoming more more desirable. An older, wealthier set of people move into that suburb. It gentrifies, et cetera, as you go along. But anyway, you get the picture. Deal, the type of deal, the location, the economy, the demographics of what's going on. What's happening right now in Australia. Let's check in on a few of these things and see, what locations are out there that we might be having a look at. Now, deals. Let's the deals. You can always find good deals no matter where you are in the marketplace. At the moment, the economy's got a big tick. So let's check in on what location is prime for some growth right now. What location is still getting growth and whatever. And then let's check in on the demographics as we roll along. So play along in the chat at home if you're interested. But, what are the, and you probably came along to mentoring the other night, so you already sort of know this, but what are the two places right now in Australia that are really kicking on in general? Now, this is not down at suburb level and every property level, but, in general, what are the two states that are really, there's probably three states, to be honest, but are really giving it a red hot shot at the moment when it comes to growth, folks, when it comes to the Australian marketplace. And, where might we navigate some of our decisions for now, and then maybe some of our decisions into the future? Because as we build a property portfolio, Sam and myself say to our investors, 5 cities, 5 properties is a high level strategic conversation where you go, we've got 5 major cities in Australia. And technically, if you could diversify into those 5 cities with 5 different properties, your growth cycle as you go along, that you might follow that sort of growth cycle if you're only in one location, right? But then if you're in another location, the growth might be opposite, and as we go, and then that you might have another place that goes like this, right? And so as you diversify across a marketplace, the growth and the value and the wealth in your portfolio, it's a pretty interesting colored squiggly line, isn't it? Is balanced out, and you've always got access to equity. There's always economic growth going on as you go along. So that's the plan. That's the idea. And we've got a few people chucking in here. Absolutely. Queensland's kicking on pretty nicely. And, the 3 leaders right now giving it a red hot shot: Queensland, WA, and SA. All right. Yep. We all know that one, don't we? We all know that one. Well, maybe we all don't. Maybe this is the first time you're hearing this in a while, maybe, and that's great news. So let's have a look at this. Let's kind of dive in and have a look at what's going on inside of Australia. Now, overseas migration has been pretty massive. Close to, I think, just over 1 million people. 1 million people have entered the Australian market, or entered Australia in the last 2 years, and a lot of those people are students. So and permanent migration, there's significant as well. The normal permanent migration before COVID was around the 150, 160. The last couple of years it's been 250, 260 to catch up. But the students have come back in, and it's an interesting one. Lots of students in, but they're not sort of graduating yet, 4 years and leaving. So the bumpiness of it all hasn't sort of flowed through. But have a look at this, folks. Hey, morning, Alison. Good to see you here. Good to see you here. Now, if you have a look at the two places and spaces that are internally in Australia positively receiving growth for population. So, the number one leader in property value growth is your population growth. So if your population growth goes up, that's an early indicator of something happening, right? And then you've got to have other things happen, population, infrastructure, employment. Okay, so jobs, as we go along. So we're checking on jobs in a minute, right? So, Western Australia getting people, Queensland getting people, that's fantastic. That's been happening for quite a while, ever since COVID, but also even prior to COVID, those two states, because of employment, because of lifestyle, because of affordability, all of those things were attractive. But it seems the rest of the country is losing some population. Now, it's not the end of the world, to be honest, if, Sydney loses 31,000 people. It's the largest population in Australia. It's not crying its soup about it. But places like Tasmania, South Australia, and the Northern Territory, with smaller populations, some of those numbers could over time become impactful, right? When it comes to our values, all right? So for you and me, right now, pros and cons, Queensland and WA certainly kicking on. Now, South Australia is doing well from a marketplace point of view. But for me, there's some other factors in here which I probably would circle around and have a conversation about. So let's have a bit of a look at this. Yeah, let's look at population, folks. Let's look at gross population, right? So New South Wales, probably Sydney's 2/3 of that anyway. That's 8 million people in New South Wales. That's pretty big. Sydney, Victoria, 7 million. Melbourne and Sydney are pretty close in size. So Melbourne's losing less people. Matter of fact, the other night, Dr. Andrew Wilson just said Melbourne's ticked over into positive internal migration. So that's good news. It's actually not losing. It's not losing population. It's positive population, only just recent. And there's a reason for that. Put in the chat, folks. What do you think? That there is a reason that Melbourne's actually now net positive attraction internal migration in Australia. Put in the chat. You might think, with all the news and the media about Melbourne and whatever, no one would want to live there, but that's not the case. Put that in the chat if you know. So have a look at these guys. The top 3 states, folks, have got the majority. 70 to 80% of the population on the east coast of Australia in those locations, right? Now, South Australia, the whole state, 1.8 million. Now, for me, Adelaide, it's the centre of that place, but it's not a big kahuna when it comes to that stuff, and the wages aren't as high as other places. So for me, when you're looking economically, Adelaide median house price up around the 800. Its wage in a minute you'll see is quite low. It's for me. I think Adelaide's tapped, but I could be wrong. Western Australia, good population, probably got a little bit more, fuel in the tank. But these 3, other than Australian Capital Territory, we'll talk about ACT in a second. I wouldn't be going anywhere near Tassie or the Northern Territory unless you live there, and it might be, your PPR, right? So let's have a bit of a look at this. No surprise, folks. No surprise that the average wage over here is highest in Western Australia and the Australian Capital Territory. So where there's high wages, there's ability for growth, right? So for me, if you've got wages and Western Australia's average house price is still 100K lower than everywhere else, then the average house price has got growth in Western Australia. All right, that's yeah. Well, it's interesting, isn't it? Because right now, Alison, they just put up a $50,000 first home owner grant in the Northern Territory, but no one wants to move there, and you're saying the locals don't want development there either. Interesting, isn't it? So if you have a look at this, the average wages across the rest of the country, Victoria and New South Wales, Queensland, and then, South Australia and Tasmania, quite low in comparison. You have a look at where is their spare income compared to the average house price or property price, and basically in there's growth, folks. That's what happens. That's what happens. But anyway, hopefully you're getting the picture. Morning, Jeff. How are you, mate? Good to see you. So we've got that. And then when you add in, these wages and other bits and pieces and sort of who's getting the lion's share of the lending right now, it starts to take a little bit of effect, right? Because owner-occupiers losing ground, first home buyers haven't been out in too much force. But right now, the investors are getting the lion's share of the investment lending, which means they're chasing deals, right? They're chasing deals around the country, and that's good. Rents are high, and maybe that's unlocking a few things. But I'll leave it here today. But this is a really interesting one. We had the demographics group come in the other week and talk about what type of properties are going to be in demand because of the demographics of Australia aging and getting ready and, economically, right? So, student accommodation and renters, that's pretty massive over the next, over the next 10 years. So they're talking about 2024 to 2034. Okay. That's kind of the age group as well, like sort of the number of these via age group. If you look down the bottom here, it's quite an interesting thing. And then first home buyer, like have a check this out. Like, the first home buyer demand is going to be massive. So, if you're in that world, when it comes to your investment deals, it's interesting to see who you'll be competing with and whatever. And have a look at this, the downsizer deals. Now, many of you have heard me talk about this. What's the downsizer deal that's just blowing up right now? And it's like, it's gold. If you can get one of these types of properties in the right location, with some views and a good building, what's the downsizer deal that people are, if you're an investor right now, if you've got the money, you should be parking in, and you'll make truckloads over a 10-year period. Who knows what that looks like? Because we've got put it in the chat. What type of deal is it, folks? Because in the future, the downsizers are going to be super, and I'd call it right sizing rather than downsizing. But they're going to have a significant amount of wealth, and they'll pay a premium, absolute premium for, boom, dead right, Jeff, 3 or 4 bedroom units in good buildings with views, right? Every single one of those. Now, we've all made a bit of money in the last little bit, but the extra premium, yep, certainly apartments, the Tando. And, folks, to be honest, a really well-built, good, high-quality townhouse will do well as well. They're a bit more suburban located. So, they might be a little bit quieter, but certainly every 3 and 4 bedroom apartment with some views, connected to cafes and lifestyles and stuff like that is absolutely killing it, and will do in the next 10 years as well. So, but so too will, the other types of properties in good locations, but there's just different versions of the world to have a bit of a look at. Well, what's the point of this morning's conversation, folks? Well, Where's the growth? Well, the growth will continue in Queensland and Western Australia. But where's the value right now? Where's the value? And some of you saw this the other night. We've been talking about it for now. And there is value buying in Melbourne. And value buying in Melbourne per square metre for new properties. The existing property market's still a little bit high, but the new property market in Melbourne is quite good. And just now, they've announced that they'll have significant stamp duty cuts for any buyer in Melbourne. That will bring investors to Melbourne significantly in droves. The rental yields are very strong in Melbourne as well. The prices have been compressed in certain styles of properties, and there's great value there. So interesting. Anyway, value market is Melbourne. If you can get yourself a piece of Sydney, I would. But for some of you, you've got Queensland. You might have Western Australia. Remember the diversification process. Melbourne's a great city. Like, ignore the politicians; they're idiots. The people who live there are wonderful, and they do vote for the wrong people, though. Anyway, maybe they should sharpen that up. Anyway, I've gone over time this morning, rabbiting on a little bit, but hopefully you know the drill. Big populations, good opportunity price-wise, and now some motivations, some local economic motivations for Melbourne. I think's a winner. Yep, I think's a winner. Melbourne's a fun place too. Yeah, dead right. If I want to go to a show, I'll always look what's on in Melbourne. Always. Anyway, there you go. It doesn't win like, most livable city 7 years in a row without being, something being there, folks. Anyway, that's it from me this morning, folks. Good to see you. Oh yeah, we got the bus tour on actually. Yeah, it's on pretty soon. Sam and his town planning tour next Friday. Actually, this year's coming. The finish of this year's coming in hard and fast. All right, folks, that's it. I'm totally off track. Wealth Coffee Chat's done and dusted. Good to see you. Thanks for joining us this morning. And join tomorrow. We've got Finance Friday. And if any of you are around in Melbourne next week after, maybe, jump on the bus tour. All right. Thanks, folks. Adios. Bye-bye.
Episode of Wealth Coffee Chat, folks. Make sure you like, subscribe, and turn on your notifications so you never miss a thing when we go live. Improve your portfolio and investing game, folks, with Wealth Coffee Chats live every morning at 8:10 each weekday. Make sure you join us. Previous episodes are also available wherever you get your podcasts, folks, as well as our other podcasts from the 6 Star team here at positivementor.com.au.